record it first. Okay, I did record it. So if I go over, as you see, this is a 184 unit and 2003 years old building and prime value add opportunity. And the Henley at the Rosenberg, we have two more Henley around the area. So Henley apartment is a brand name. And as you see, ugly exterior color, we can cosmetic touch up. It's an easy turnaround to look high-end looking. So it's kind of easy because it's a quality construction built in 2003 and no foundation issue, no roof issue, no structure issue. And it has a individual HSBC, which is very expensive to maintain. If you have a chiller, which is the older property, we do not go to the C apartment. So this is a disclaimer. Investor need to understand the deal and due diligence and study the deal. If you have any question or concern, you can call me, text me anytime. I will be there for you.
Okay.
And the sponsor team Dustin has 180 million transactions and Hayden have 85 million.
I want to know, how do you know these sponsors?
Business Commerce. So those John Montiel and Miro is my repeated partner for my previous deal. And John alone, he owns the 5,987 multi-family units. And he have a 576 million asset under management right now. Those are the big players.
Previously done a deal with him?
Yeah.
Okay.
So Miro is the also previous partner. We had a deal in Edison in Houston, Westheimer area, and he's an SEC attorney. So he is a big name in the industry. The best way to let them know is to Google them, and the public record will tell louder than my own voice and my own mouth to tell them how great they are because they're my team. So you know me, I'm a commercial broker in Texas area. I pursuing CCIM, also 14 years of a corporate America management experience and focus on multifamily only full time. I'm fully committed and I'm very happy to help achieving other people's better finance future. So as you know, this is the interior. They have a quality constructions. It's one of the upgraded unit, A+, Houston, Texas, Rosenberg, and adjacent of all the Fortune 500 corporate America job. And we have a pretty good amenity. All we have to do is just touch up the exterior to look more sophisticated and modern and more polished looking. We can turn around this to be high-end looking easily. And as you know, the purchase price is 35 million and almost 200 units, 184, 2003 years deal. And the equity is 13 million, which is we already raised. And we have a little additional to raise because just for the backup and contingency. That's the reason why I told you we have a 2% gap for the investment opportunity. So the subscription will be filled up soon. And that's the reason why you register already. And after this, if you like the deal, please sign a PPM so that you make sure you will have a ownership to proceed into this towards this amazing asset. And I will fast forward. This is interior right now, but I will fast forward for the finance part.
Really good. I mean, it looks, so you're not.
Yeah, this is the upgraded unit. So if you see 25% already upgraded unit is existing, but the left side is a classic unit. The classic unit is not that at all. We just change the color to be more modern looking. We can resurface the door and put a high-end looking doorknob hardware and change the countertop to be granite. That's it. So it's going to be light cosmetic touch up and investment.
10,000. It's about 10,000 per door on the rehab then, right?
Yeah.
Okay.
So average unit size is 910 square foot. Is pretty big for the area because it's a high class area, and the 97 occupancy. So occupancy is pretty good.
Very
So
good.
if we go investment pro forma,
Mhm.
the first year is 1.6 million. And second year, we projecting as a 2 million. Third year is a 2.3. And after third years, we're gonna stabilize in income and we're gonna refinance. And
Mhm.
either we refinance and give you the refinance catch up, or we wanted to exit. So I can show you the investment pro forma. If you go with a 150K minimum,
Mhm.
so that your preferred return will be 8%.
Mhm.
And first year cash on cash is 4,500, and year two is a 9,500.
Mhm.
Year three, you're gonna have a 20,000 approximately, have a refinance catch up. And the
Mhm.
year four, 12, year five, 13,000. So
Okay.
if we just go with the middle, let's say the cap rate, we're selling your total deposition is a 250K. That will be your total return. It will be annualized at the 20%. So average cash on cash is around 7%.
Oh, real quick, Eleonora. Okay, so back on this is what I'm still trying to understand and I'm confused about. When
Mhm.
you look at the when you say, and I'll learn more about this, but the return on disposition. So let's say I put 100,000 in, I made and
150.
yeah.
So
Okay,
if
so
this
let's
is
say,
150.
for example, I put it because I can see a newbie investor asking us. So I put in 150,000, and every year I'm getting this return. And then what do I get when you sell?
So
Just
when you sell, you
yeah.
will getting back your initial investment 150,
Okay.
and then plus another 100,000 or 130,000 or 150,000 or 180,000. Depends on the scenario, but
So
at
it's
least
split on the sale.
your total return is double. Total
Yeah.
return means include all the cash on cash and
Okay.
the refinance catch up. The important is all you have to do is equity multiple line. To me, easy calculation. When I look at the equity multiple line, I will just those 5 scenario. I will just look at the middle, and you
Mhm.
will see the 2.2% I highlighted with your initial investment amount. So in my calculator, I will do 150K,
Mhm.
150K here
Mhm.
times 2.21.
Okay.
So 330,000 is my total return. So if total return is 330,000 minus my initial
Yeah.
investment minus my initial investment,
Mhm.
180,000 is my total return.
It's fantastic.
Okay.
Wow. Mhm.
So the return is higher when you put more investment.
Right.
But if you do the 50K minimum in the B class B is a 50K minimum.
Right.
The year one cash on cash is 3,000 and year two is 6,000. Year three at the refinance, you will have a 13,000 return. And year four, 8,000, year five, 8,700. And then if we go with this is a scenario of a 5 different scenario, but if I go the scenario of the middle, just the middle in between,
Mhm.
average, right? Make it average is a 2.11% return, but equity multiple with a 7% preferred return. So preferred return is that you're gonna have a 7% return anyway, okay? So
Right.
so if I calculating my 50K here, and then
Yes.
times equity multiple 2.11 is 105,000, right? Do you see 105,000?
Yes.
Minus my initial investment 50K,
Right.
then my total return is a 55,000.
Okay.
Okay, so if I'm moving on to the capital stocks, so the class A, we get the ownership and split with the general partner with 20%. And then the class B will get the 30%. And then the preferred return is just a 1% difference.
Yes, okay,
Class A got a 8% preferred return, and the B 7% preferred return.
okay,
And then the debt, this is the amazing debt financing that I told you. The
Yeah.
principal debt amount is 28 million, and loan to value is 75%, which is impossible to get. Everything is a
Yes.
65% now.
it is.
And
What,
the interest,
can I ask you a
yeah.
question on that, Eleanor? So how are they, the 75%, loan to cost? Why is that lower? Because like you're saying, it's 60-40 now. Is it because they locked
loan to
that rate?
value is lower because they don't give you interest rate. When the interest is high,
Right,
loan to value do not grant you the higher loan to value. That's just removing they try to risk mitigation as a lender's point of view.
right. So as that interest rate goes up, they're gonna require a higher equity,
More down payment.
more
More
down
down
payment.
payment.
Down
That means
payment,
you
yeah,
have to raise more money.
right.
And
Okay,
in order to raise more money, you have to go smaller deal or the cheaper deal.
right.
So in that scenario, we set as a floating rate of the cap. So we
Okay.
bought a cap rate. So
Yeah.
4.1%, which is a almost miracle for now.
Yes,
And then we bought a cap to catch up 4.4% fixed rate for the 3 years.
okay,
So we have to buy the cap to fix the rate 4.4%.
okay. How much does that cost? How much was
The
that fee?
cap, I
Yeah,
think the cap was about 1% of the loan amount, but
okay,
if divided by the the monthly is not as crazy.
okay,
Since we have an NOI,
Mm.
higher NOI, right? So
okay,
we can more than capable to do so because
Okay.
apartment producing a strong income cash
Mhm.
flow every month.
Mhm.
And then asset management fee is 2%, acquisition fee is 2%, sponsor
Mhm.
comp is 20 to 30%, but we will not get paid until you get paid 8% preferred return, 7% preferred return. That target is the meet. That's the preferred return is a favor to the investor.
Right,
And then we're not charging you any hidden fee like a refinance fee or the disposition fee. I know
Mhm.
the Rockcliffe charging every fee, but we
I
don't charge.
know, I saw that I definitely noticed that when I was looking at it, so.
Yeah. So we wanted to favor to our investor. And this is the exciting part, cost segregation. So we hire the cost segregation specialist
Yeah,
to cost segregate all the item in the property.
yes,
So when you invest 150K, you're gonna have 105% over the 5-6 years. The paper loss for the first year will be the 70%, which is 100,000, 106,000.
so you have the $100,000 loss
Yeah.
that first year.
And then class B, if you invest 50K, also have 100% over 5-6 years. But first year, the paper loss on the paper, you lose, even though you have a profit, but you are losing
Right.
35K.
Okay, I have a question on that because cost segregation is going away after this year, correct?
Mhm.
Okay, so, I mean, if you put more in, maybe it's better because you will get that
Yeah.
advantage of the cost segregation,
Yeah.
right? That you won't get it next year, so.
Yeah, the next year will be 80%.
Oh,
That
80, okay,
Yeah.
it's, okay,
So, but if you invest 150K for the 80%, that's a huge difference. It will
Mm.
be, if I say 150K minus 20% is a 30,000 already. It's a 30,000 benefit difference. So
yes, okay,
that's why a lot of people in looking for deal this year.
yeah,
So
Yes.
if you invest more, then you have a more benefit this year.
this year
That's
at the
just the
100%. It's 100% cost
Yeah.
seg, and next year will be 80%, right?
Yeah.
Okay, yeah,
So the property profile is, I will just make it quick because since they have a pretty good physical condition already, is a
Mhm.
garden style, and then concrete paved and copper wiring, which is very favorable to many construction maintenance.
Mhm.
And it's very little to concern about any other else, because roof, structure, foundation, everything is a good condition right now. Of course, it's younger, right? 2003.
But you still allocate under the CapEx or?
Yeah, we
Okay.
have a contingency, save the
It's
money.
required, right, by the lender?
So, and then important, that business plan that you should know is this property charging lower than market
I
rental.
know, I saw that.
Yeah,
That
it's
was
350.
a lot. Mhm.
And then if I combine with the adjacent A-class apartment, it's a similar year.
Mhm.
And then especially the pace is the same year as us.
Mhm.
We're charging 300 more. And if I sum up all the adjacent apartment, it's 600, almost 589, almost 600 lower. So we have a huge potential to grow.
Oh, huge. Why haven't they increased it? Because there've been huge.
Because I think the exterior is ugly, so it's less attractive to the potential tenant. I think cover field is pretty important for not only for the single family. The apartment, if we have a luxurious monument with a nice fancy reflecting night light with
Yes.
attractive cover field, it look a lot high-end looking.
Mhm.
And the even the existing tenant will proud to in and out to their property, potential tenant, if I list out this apartment, I'm gonna move there, something like that.
Yes.
So,
Yes.
so that's the very easy planning, since the painting is the easiest part.
Mhm.
And market overview, I'm not gonna detail everything, but here is a huge market potential.
Mhm.
Neighboring and everything home developed is 400 to 600K approximately residential home. So it's a young and professional gas and oil and medical job industry, and
Okay.
abundance of retail and restaurant.
Very close
So
spot.
not only that, we have an Amazon location brings 3,000 jobs in the area.
How close is that? I didn't get to this
It's
part.
it's not so far. Everything is a 15-minute approximation. So
Okay.
maybe some is a 20 minutes, some is 10 minutes, some is 5 minutes, but whatever they can commute, this apartment will be a residence for them.
Okay.
So,
I know Rod mentioned, he likes to look at the tenants and where their employers are. And
yeah.
do you guys look at that as well? The current tenants, where they're working, or you do? Okay.
Yeah. So it's a 10 large central business distribution and 158 employees, 3,000 business, 51 million office, and 20 Fortune 500 company, and on and on and on.
Yes.
So I'm not go over all the demographic, but this is self-explanatory if you just a glimpse of the reading the title. So demographic is it's already contained in the presentations.
Yes.
This is the job market and employer, and pretty substantially solid. They're not going anywhere, but it's keep coming adding. And as I told you, we love Houston market because it's not the crazy top to ceiling price like Austin and DFW. Austin and DFW is so expensive. It's not making sense value add.
Really? So that's why you like the Houston market over Dallas.
Yes, but that doesn't mean Houston market will not catch up. It will catch up. The previous pandemic of few years, Gary and also is kind of slow, but right now it's a speed up so much. It's keep going up like 20%. But in my underwriting, I just adding a 5%, 7%, and 8%. So it's very, very realistically achievable.
Okay.
So my Zoom might be ending in a few minutes, but I'm gonna saving this recording and I meet with you again with the underwriting.
Oh, okay.
So that you will not exploding your head, but you have a time to digest.
Okay. Sounds
and then
good.
inviting your friends and family in a group chat.
Yes.
And then share. Once I say hi, I can share the recording, and then after that I can share the presentation deck so that
So once I introduce them in the group chat, then you'll reach out to them individually and maybe
I
try.
will communicate in the group chat
Oh, okay.
and then invite to the Zoom. And then if they want serial of the question, they can contact me individually
Okay.
so that people not annoyed by a lot of
Yeah. But then you would go through the presentation like you did with me.
Yes. I would like to take more efficient way to let them helping them understanding. As I
Okay.
know, education is my passion. So whether they invest or not, I
Yeah.
want to help them to learn about this best investment vehicle because I am
Well,
most happy.
Yes. And I liked the approach. I know our time is running up, but I liked the approach yesterday of what some of the panels said, that I don't go and promote it, but if they inquire, I gauge, and he was definitely keen. I mean, I thought, oh, this is such a good example of what they were talking about. Then he said, hey, let me know if you see anything, an opportunity. So
Yes. Yeah,
okay.
that